Welcome back. It's a Friday morning. Global setup is fairly upbeat, but the GIFT Nifty after yesterday's massive sell-off of 300 points is still pretty flat. But it's a big day in terms of earnings reactions. And straight away, let's get to our team with CNBC TV18's list of top stocks to watch for the day. And first up, it's Vinny on Lupin. Hi, good morning.
Good morning. So Lupin, good set of numbers coming in from the company. Street was expecting this good number as well. About the CNBC TV18 poll is what we're seeing that the numbers came in at. Revenue saw a growth of around 13%. Margin seeing a growth, a sharp improvement in terms and expansion in terms of margins. 23.6% is what the EBITDA margin stood at, and profits saw an improvement by around 74%. Now, obviously, India sales growth grew by 19% versus a poll of 11% what we had. So better in terms of performance there, led by outperformance in diabetes, cardiology, respiratory and GI in the India business. US sales largely in line. $220 million is what the sales came in at versus a poll of around $232 million. So largely in line. Drug opportunity of Myra background, that is something that is supporting and aiding the margins as of now. We will see that benefit coming into the US business going forward as well. Growth markets also have seen a very good improvement, strong growth on that front. So all in all, a good set of numbers from Lupin.
Okay, all right. Thanks a lot for that, Vinny. Let's go to Vamakshi. Vamakshi, tell us more about Cummins India.
Well, the company reported a good set of numbers. This was an important quarter, and that is because it was the first full quarter after the implementation of the new emission norms, and the company has performed well this time around. Revenues came in at 2,492 crores. This is an uptick of almost 31% that we're seeing on a year-on-year basis, and it has come in much higher than the street's expectations. The gross margin, however, contracted by around 90 basis points, and this has taken place mainly on account of higher raw material costs. The EBITDA margin at 19.3% fell short of street expectations by nearly 20 basis points, but nevertheless, the EBITDA, given the strong growth that we've seen in the revenue, saw an uptick of almost 42%, came in 12% higher as compared to street expectations, and net profit at 451 crores saw an uptick of 37%, nearly 12% higher as compared to the street expectations. Overall, this was a top-line led beat for Cummins India. Domestic sales saw an uptick of 47%. Strong domestic growth is what we're seeing out here. But the exports declined by 13%, and this is largely on expected lines. But nevertheless, when we look at it on a quarter-on-quarter basis, this is definitely an improvement. The management says that they are cautiously optimistic about the demand outlook for the near term. They're also cautiously optimistic about the demand outlook in the export market because geopolitical tensions and the impact on the economies have really impacted their end markets. A con call is scheduled today at 10 a.m. So we will be waiting for the commentary that comes from the management on the exports, the sustainability of the margins, and the pricing environment. Overall, it's a good set for Cummins India. Expect the stock to open higher today.
Vamakshi, and we don't get a guidance anymore, right? In the call, there's no guidance, but there'll be an explanation of the numbers.
Yes, absolutely.
Yeah. All right. Well, thank you very much. That's still important to track, with or without the guidance, and we'll track that one. Well, Indian hotels also reported numbers. Mangalam is here with details. Mangalam, morning.
Morning. So, typically for the hotel industry, the second quarter of the financial year is seasonally the weakest, and in that the company has actually done fairly strongly. In fact, it's one of their best second quarter results ever, and they've been improving over the last 10 quarters itself. Consolidation of Taj Sats has further aided the numbers, and the net profit has been boosted by that 307 crore exceptional gain coming in on that consolidation itself. Additionally, they've also announced an acquisition, 55% of stake in Tree of Life Resorts for about 18 odd crores. Overall, the revenues grew 27%, the EBITDA grew 41%, and the net profit saw a big surge, largely on account of that exceptional gain. Occupancy is better than the industry at 71%, and the average room rate as well at a little over 10,000, better than industry at 7,000 as well. More importantly, now we're getting into the business end of the year. The H2, the company projects double-digit revenue growth led by 30% higher wedding dates in the second half as against last year, and foreign tourist growth expected to be around 8 to 9% with domestic tourist momentum continuing. So all these factors point well for Indian hotels.
Thank you very much for that. Moving on now to, by the way, Indian Hotels Management will be joining us today at 10:15 a.m. So you do want to catch that interaction. But moving on now to RVNL, back to Vinny.
So So RVNL, not an exciting set of numbers coming in from the company. Whether you look at the revenue growth, quite muted, down actually 1% on a year-on-year basis. Profits of the company have seen a decline of 27%, and even the operating performance hasn't been strong. EBITDA margins are down on a year, by around 50 basis points on a year-on-year basis, coming in at around 5.6%. Looking at the other income, that's seen a bit of a subduedness as well, down 5%, while operating expenses, they have been a bit lower. Expenses overall have been a bit lower, but despite that, we're not seeing any respite coming in for the profits or the margins of the company. So subdued revenue growth and not much excitement in terms of the operational performance. We're expecting the stock to open up in the red, and let's not forget, in the last year, 6 months, the stock has seen a very sharp run up, so will be interesting to watch out for that. Red is expected here today.
Okay, all right. Thanks a lot for that, Vinny. Well, let's go across to Vivek, who's here to tell us about NHPC. Morning, Vivek. Hope you had a good birthday evening, but good to see you in today. You can continue the party maybe later today, but tell us about NHPC.
Well, good morning. That's right. So NHPC is the one we are looking at today. Slightly subdued strength. Remember, company has multiple projects, that are either plagued by flood worries like the Teesta 5 project, and other than that, there have been delays in commissioning as far as the Parbati as well as the Subansari projects are concerned. On the back of that, slightly subdued quarter, generation not too much higher this time around. Revenues higher by 4%, EBITDA higher by just around 2%, margins at 58.9 versus 60.3. Now coming to the profitability part, number one, deferred taxes this time around, something that the company has recognized that has impacted the profitability quite significantly. Higher finance costs, higher tax expenses, but however, higher other income offset some of these concerns. On the back of that, profitability down almost 41% on a year-on-year basis. Now, apart from that, the profitability also saw a 250 crore claim that the company has recognized as far as Teesta 5 landslide is concerned. So overall, important to note, when will be the commissioning of Subansari, Parbati, and when can Teesta 5 come back on board? Expect some red on NHPC today.
Okay, all right. Thanks a lot for that, Vivek. Well, SAIL, that one will be reacting to its numbers. And I'll tell you what, over the last few quarters, the most dangerous result to listen to that whisper number is SAIL, because there's always some kind of one-off in there. The numbers are a miss. If you look at the volume parameter, it's missed what we are working with. We have worked with adjusted sales as well as adjusted EBITDA, and both of them have missed the estimates that we put up. Why are we talking about adjusted? Because they include this component, which is the railway price revision in the sales, which we consider as one-off. So X of that, actually, the numbers are a miss. In addition to the weak operational performance because of lower realizations, there's no operating leverage that played out for them, and higher cost, the net debt number as well remains elevated at around 35,500 crores odd. So sales numbers go down as a miss. I expect the stock to open up in the red. Okay, all right. Well, let's hop across to Upasana. She's here to tell us about Cochin Shipyard as well as Astral. Morning, Upasana.
Good morning, Nigel. First up, let me start with Cochin Shipyard. Company has missed their street estimates. Now, it's overall been a muted performance, and there has been a significant rise in the material cost, which has impacted the margins and the profitability of the company. Now, revenue stood at 1,143 crore with an uptick of 13% on a YoY basis, and gross margins dipped by 410 basis points at 47.2. EBITDA margins also saw a dip of 170 basis points at 17.2%. Now, margins are under pressure for both the segments on a YoY basis, and ship repair, which is mainly a high segment for the company, was down about 260 basis points, while the revenue was up about 13%. Coming to company's shipbuilding segment, the revenue saw a growth of 13%, while margins were down about 220 basis points here. Now, higher cost of material and sharp fall in the other income has led to a low single-digit PAT growth of 4% on a YoY basis. Now, next up, coming to Astral, the numbers were below street estimates. Revenue growth was flat on a YoY basis, and company's key segment, that is the plumbing segment, saw revenue degrowth. EBITDA margins stood at 15.3% with a downtick of 80 basis points, and margins were under pressure, 450 basis points in company's paints and adhesives segment, leading to an overall margin pressure. Now, PVC raw material prices were very volatile this quarter, as seen in is a common trend which was seen in other pipe companies as well, which has dented the margin, is what the company has indicated. Now, PAT stood at 109 crores, which was further down by 17% on a YoY basis. So weak results from Astral as well.
Right. Upasana, thank you very much for that. Well, AB Fashion and Ircon are the others we want to focus on. Vinny is here with those. Vinny, morning.
Good morning. So both of these are expected to open up in the red. When you're looking at Aditya Birla Fashions, not an exciting set of numbers versus what the analysts were expecting. So revenue actually saw a growth of 13%, but the company continued to report year as well. Margins have remained flattish at those 11.3%. Revenue growth this time was impacted because of the subdued consumption trend, weak margin performance that came in both in ethnic wear as well as pantaloons, and both of them reported an EBIT loss. So that's a bit of an impact that we're watching out for. Inflationary pressure obviously leading to subdued consumption trends, apparel market that saw a bit of a fluctuation, and there were lower footfalls. This is the highlight coming in from the company, so expected to open in the red. Lastly, we also have Ircon that's in focus. Not a good set of numbers there. Revenues down by around 19%, profits of the company down by 18%, and margins also have seen a contraction of around 40 basis points on a year-on-year basis. So weak performance, weak operating performance, and we'll see Ircon International opening up on the lower side.
Thank you very much for that. These railway companies were the darlings of the post-COVID rally, but now the numbers have been disappointing. RVNL first, now Ircon too, as Vinny pointing out. The numbers have been weak. These stocks have corrected about 25-40% from its recent highs, but even after that correction, they're still up 100-200% in the last 1 year. So let's see how they fare from here. A quick recap then of the top stocks with positive news flow are Lupin, Cummins and Indian Hotels. Very few. Stocks with negative news flow are RVNL, NHPC, SAIL, Cochin Shipyard, Astral, Aditya Birla Fashion and Ircon. So more red than green this morning in terms of individual stocks. But it's time now to get a handle of all the action from the commodity and currency space. Manisha is joining us. Hi Manisha, good morning.
Morning, Rima. Thank you for that. Well, the US dollar has retreated from its 4-month highs, and that has supported commodities. Also, the US Fed cutting rate by 25 basis points, as expected by the market, has been supportive as well. So you have had the crude oil prices gaining 1% overnight. For the gold and silver prices, also it has been a strong comeback, 1% gain for gold, and silver prices gained up by 2%. For the base metal prices, remember it was a very sharp cut as we were listening to the Trump election numbers there. But overnight, with the US Fed and the US dollar declining, there has been a good support here as well. So you have the copper prices, which gained up by 4% overnight. Zinc was up 4.2% at one point in time. Aluminum prices gained up by 3.5% as well. Well, all eyes now on the China National People Congress meeting. Today is the last day, and expectation of a stimulus measure coming in from there clearly seems to be supporting all metals.
Okay, all right. Manisha, thank you very much for that. So commodities in focus, metals, by the way, the Nifty Metal Index was the top loser yesterday, but that was also because of stock-specific reasons like Hindalco, which took a very sharp hit. Siddharth Khemka of Motilal Oswal will be with us on the other side as we discuss some of these stocks and results which came through after markets and, of course, stuff which we're expecting today. Stay with us.